Good evening, everyone. Hello. It is Sunday evening, the 10th of January 2021, and I'm having a look at the major commodities. I'm going to start off with gold here. So the first thing I want to highlight here is there's now a new level of resistance that I would consider significant here, which is 1950. Let me just kind of edit that so it's nice and clean. 1950. Now, the reason I mention this is that this weekly candle, all right, we failed to break the previous high at this point in time. That's a strong reaction off that 1900 level. And it's actually pretty good on the monthly in terms of it potentially becoming bullish again. So here's my thing, is that one of two things is about to happen. This really should not have occurred if the trend was likely to push through in a nice, calm, stable fashion. We saw quite a bit of a sell-off on gold, and 1850 may indeed hold. But what this implies from experience is that this implies that I can delete that. Oopsie. Let's just get rid of that one. I wasn't aware that this implies that the probability or the possibility of gold going into a range now is real. It's very possible that it can start ranging at this point in time. If it was a nice, normal, healthy trade, it wouldn't have done that. Therefore, a strong correction like that is either an indication of us going into a range or potentially some kind of it's a consolidation of sorts, and especially with that weekly candle. Doesn't mean that this week we couldn't perhaps break a little bit lower, then finish up with a bullish candle and then carry on and resume the trend. But certainly I would say there is some distraction in the market, and gold is considering what it's going to do. So for me as a trader, this is not ideal because I'm looking to see this new or the longer term here trend resume, and I'm looking for price action to calm down and become well behaved, and it's not doing that. So that is a warning sign to me to sit on the sidelines and watch for until gold reveals what it wants to do next, which is either to head lower or to head higher. And it also means that if it is range bound, it's going to struggle to get past this. Either of these levels are around its range. And so I might find that I actually don't trade it. I don't find any trading opportunities this week. But what I am also then looking to see is if by the kind of end of next week or as we head towards the end of the month, that we perhaps get a bit of a bullish recovery. So we maybe end up with a bullish candle on the weekly, and we start to see that monthly starting to head up a little bit higher. So that's what I'll be looking for, with the implication being that as we continue into Q1, it's going to continue higher. But this is an alarm bell. So if you're ever wondering what it looks like when the market is signaling to you that it's about to change, this is a clue. And so what it means, as I said, is potentially that it's about to become range bound. The most likely is range bound, second most likely is a move down, and the third is a manage to recover and then carry on as though nothing has happened. So I'll be cautious with that. I'm watching it from the side. Silver is going to be the same thing. Silver's actually come back down to a really nice monthly level support. I'd like to see if that can crawl back above that level and then perhaps continue, but this in itself is a bit of a shock to the system. Then having a look at copper. Copper looks pretty good so far. It's a little bit overextended on that monthly basis. But a pullback down to these levels here could find that it can test some support, and there could be some buying opportunities there. Looking at platinum. Platinum also a strong reaction here just over that level, that 1.1 level, and knocking it back under and then producing a bit of a weekly rejection candle. So as well as a monthly rejection candle. So definitely something going on there. Again, immediately cautious now on that. Palladium taking its third knock, at least recently. And that monthly candle looking quite strong and bearish, this looking nice and bearish, or nice and bearish, just bearish. And so for me, those are alarm bells, meaning that the simple question is the market strong and bullish? Because it's not displaying strong and bullish signals. So that is simply saying to me, be cautious. Then oil. So you might recall, obviously, that over the last year, up until the last couple of months, I was saying up until we broke this previous high, I was pretty much looking for the longer term trend on oil to head lower. Subsequently broke back up and has now gone into an uptrend. So we've got a higher low over here and a higher high here. We're pushing through. We're back up above 50 here. So now this is officially back on my watch list. We will be hitting into these lows over here, and we could naturally find some resistance there. But now I'm going to start to look for buy opportunities in this to potentially pull back, find support, and start to climb higher. It'll be the same on Brent, and it's going to be the same on light crude. So actually oil is showing some potential there, and all I really want to do is be very cautious as we enter these levels of support, which I've highlighted here on my weekly time frame. Then finishing off on Bitcoin. So if nothing else, of course, Bitcoin has really smashed all the way through, gone up to 40, where I was looking to see it turn at 20. It's gone up to that. So if you weren't a multimillionaire the first time around, you could potentially have made it really become almost a billionaire at this point. So hopefully it's been worth it for those who did stick it out. But there's no doubt in my mind that it's parabolic. Then we have a bit of a bubble forming. And it's one of the things I recall saying is that it's unlikely we would have a second bubble. Once, humans have identified an area, they normally get spooked and they don't go away and they don't get as caught up in the fever. So it's unusual to have two bubbles on any particular, in any particular kind of in the same idea. We have historically, we tend to only have like a .com bubble, and then we have a credit crunch bubble. They tend to differ. At any rate, I still stand by my assessment that this has gone parabolic, that it's higher risk at this point in time, certainly from an investment perspective. And so I'm looking, obviously here we've got a swing high here, so looking for price to come back down. At this point in time, in isolation, that daily trend looking really nice and healthy. So potentially there are some buying opportunities, but the risk of it doing a larger correction is quite high now. So for me, this is, as a trader, I'm pretty much just going to wash my hands of this for now. I don't think that it's necessarily worthwhile going nuts on it. Ethereum, to me, has now had its, this is one of its biggest moves in January. It's had some really big moves here. It's producing the larger candles. And so again, looking to see how it reacts when it gets up to the previous highs, closer towards 1500 and 1400, and then seeing how that reacts. So from a trading perspective, the possibility of a correction coming down from the side is higher, and therefore I'm just a little bit more sketchy. I'm a little bit more twitchy about it. Sorry, I was going to say concerned and twitchy. And so I want to kind of see how that reacts. Potentially pull back to 1,000 might offer a buying opportunity. I'm just going to be very cautious if I see an opportunity. But I got to say that the whole idea here is, to me, is much higher risk, and therefore I'm concerned about that. I'll calm down once it has a stronger correction on the higher time frame, and then I'll be looking for longer term opportunities to the upside. I think that over time, I think these will continue to climb year in and year out, but these kind of massive moves to the upside introduce a lot of risk in terms of the next kind of move to the upside. So any kind of a correction here is higher risk because the market is already overpriced on the higher time frames. And that is really it. So my favorites of the lot so far being potentially copper, but also the oils. I'm quite liking the look of that. And also what I do like is they're not all that closely correlated. So we've had in the past where we've had commodities across the board climb and across the board drop when we had the first lockdown in almost a year ago. Holy cow. This time around, it's nice. Interesting to see oil climbing a bit. Gold is struggling a little bit. Cryptos are boosted. So I kind of like the fact that they're all doing their own thing. I think it's a good idea. I think it's potentially an indication of stability. But having said that, I'm going to be cautious this week on these commodities that I've gone through, and I do like oil the most. There we go. Thank you very much.